India's richest man is Reliance Industries chairman Mukesh Ambani, whose wealth exceeds $119 billion. In contrast, China's richest man is Zhang Ziming, the founder of TikTok owner ByteDance, with a fortune of $49.3 billion, which is not even half that of Mukesh Ambani. India's growing wealth is in sharp contrast to China's billionaire exodus, whose wealth is not just in decline, but who are also leaving CCP regime by the truckloads. The Hurun Rich List, which compiled this data, has labeled India as Asia's wealth creation engine and said that while India experienced a 29% increase in its number of billionaires, China witnessed a 25% decline. According to Hurun's 2024 Rich List, China's billionaires are emigrating in record numbers, which has seen the statistics drop by almost a third since 2021. Hurun, a private research organization monitoring China's billionaires since 1999, reported that the total number of billionaires in China reached a high of 1,185 in 2021. But since then, this number has dropped to 753, marking a decline of 432 billionaires or 36%, signaling a trend of Chinese super-rich choosing to lie low and finding covert ways to flee the country with their money. Amid an economic slump in China, the number fell by 16% last year alone. According to this data, China has marked the third consecutive year of declining fortunes, witnessing a total of reduction of 10% in wealth. Also marking the lowest addition in 2 decades, China added only 54 new names to its rich list this year. Similar reports emerged earlier this year by an investment migration firm, Henley and Partners, which predicted that China will be seeing an outflow of 15,200 high-net individuals in 2024. Meanwhile, 13,800 high-net individuals with 30 million to 1 billion in wealth exited the country to leave for the United States, Singapore and the UAE last year. Now, these ultra-rich Chinese citizens have found a way to move their money abroad, despite strict rules on how much money can be taken out of the country, with a limit of $50,000 per person per year. American think tank, the Council on Foreign Relations, estimates a staggering $738 billion was drained out from China in the third quarter of 2022 alone. Rupert Hoover, founder and chief researcher at Hurun Research Institute, said, quote, "The stories of the individuals on the Hurun China Rich List tell the story of the Chinese economy," unquote. So why is the rich list in China shrinking dramatically? Crippled with an ongoing housing crisis, coupled with a high unemployment rate, local government debt, declining consumer demand have all dented Chinese wealth, which is proving to be a bad omen for its billionaires. Earlier, Fitch Ratings had downgraded China's sovereign credit outlook to negative in April, followed by a similar move by Moody's Investors Service last December. After failing to meet its 5% growth target for 3 consecutive quarters this year, the Chinese government finally pledged over $1.4 trillion in new government initiatives to boost growth. However, the ultra-rich fleeing China can be seen as part of a larger trend of fed-up young people becoming disillusioned with the celebrated Chinese work ethic and the freedoms they observe in the West, leading to the emergence of the lying flat phenomenon. In Xi's China, people refrain from showing off their wealth due to increasing government crackdown against entrepreneurs and the extension of the Communist Party control of requiring individuals to share their wealth. Chinese billionaires seem urged by Xi Jinping's aggressive push for common prosperity, clamping down on private enterprises and non-state enterprise companies. Nowadays, simply criticizing the national economy in China can lead to someone disappearing, similar to what happened to Alibaba founder Jack Ma, who was effectively exiled in 2019 for questioning the Communist Party of China's policies. On second spot in China is Zhong Shansan, the founder of Nongfu Spring, China's largest bottled water company, who possesses wealth worth $47.9 billion. Gautam Adani lies at the second spot among Indian billionaires, who had a total net worth of $116 billion before the US investigation made news headlines. Third on the list was Onima Huateng, founder of Shenzhen-based tech giant Tencent, valued at $44.4 billion, while Savitri Jindal, chair of the OP Jindal Group, is at the third spot in India, and the richest woman in India with a net worth of $43.7 billion. So where are India's growing ultra-rich investing their wealth? About 30% of India's super-rich are investing in luxury real estate, but this is happening especially overseas. Investing in startups is gaining popularity, particularly among the younger, wealthy Indian generation, to diversify their portfolios. Equities also continues to be a preferred asset class for Indian wealthy, thanks for their potential for high returns. But the big question remains, given the billionaire exodus in China, will Indian economy be able to close the gap to China over the next couple of decades? Leave a comment with your opinion, hit the like button and subscribe to Inconnect News.